These are 12 military tax advantages that most service members do not understand. Right out the gate, we've got the fact that you can deduct qualified PCS moving expenses. So generally when you move, it's not really an expense. However, because the military is ordering you to move and there are expenses in that scenario, you will have the opportunity to deduct a decent amount of what you spend on that move. And that's not to go into all the other, Diddy allowances and stuff that helps you with the move, but just the fact that you're going to spend money on the move and then you're going to be able to deduct that from your tax return later that year. And between the allowances you get for your PCS move and the deductions you can make from a tax benefit, this can be a substantial chunk of your moving costs back in your pocket. Number 2 is your entire pay structure. People like to get wrapped around the W-2 amount that they make on their taxes and say, I only make $40,000 a year, but I work all these hours. And they fail to understand that the military structures your pay in such a way that you receive the optimum amount of money from your pay, right? So anything with the word allowance in the title, so basic allowance for housing, basic allowance for sustenance, cost of living allowance, anything with the word allowance on your leave and earnings statement is going to be tax exempt money. So if you're in the barracks, sure, you don't get BAH or BAS, but you get free room and board and free chow hall, right? So same, but diff. If you're not in the barracks and you actually get BAH and BAS, that money is tax exempt. So let's say you live in San Diego County and you get like $3,000 a month in BAH. That's $36,000 a year that you're getting paid to use towards housing, which is an expense you would have whether you were in the military or not, but it's not taxed. So you don't get taxed on that $36,000, which means you got an extra $36,000 worth of pay that didn't factor into your taxes, right? So it might say you make $40,000 in W-2 income, but in that very scenario, you'd actually be making $76,000 and only taxed on $40,000. It's actually, after you factor in the standard deduction, there's like $16,000 or something like that every year on your pay, it's actually very common that service members get taxed on less than half of their income, right? And so I don't want to totally sidebar this entire conversation, but suffice it to say, you are saving probably $10,000+ a year in taxes just because of the way that your taxes are filed. And that's obviously going to fluctuate depending on if you're in a high cost of living area or not. But if you're not, then it's all a scale, right? But the point being, the way your pay is structured absolutely sets you up for success better from a tax perspective than virtually any other W-2 out there. Number 3 is deciding between Roth and traditional TSP. Your Roth is taxed today and tax exempt on the pulling the money out, withdrawing the money later. And the traditional is not taxed now, but taxed down the road. Generally, for most service members, Roth is probably the better situation because you're most likely at a lower tax bracket right now, again, because of the pay structure, than you will be down the road in retirement. That said, do your own homework. I should probably say I'm not a tax professional, right? So talk to your tax professional. And your matching contribution for the TSP will always go into traditional, even if you opt for Roth. So if you put 10% into your TSP and 5% of that is matched, then you'll get a 5% traditional contribution from your match, and 10% your contribution will be Roth. Number 4 is deployments, right? On deployments, you're going to get things like CZTE, Combat Zone Tax Exempt Pay. You'll get access to the SDP, which is a saving deployment program, 10% interest while you're overseas. You'll get access to the same Roth TSP, but with much higher limits. Like instead of 20,000-ish a year, it might be 50,000 plus a year. So while deployed, you can put more money into your TSP and you're getting tax-exempt combat pay. The triple threat here is if you contribute to your Roth TSP with Combat Zone tax-exempt dollars, you don't have to pay the taxes on the way into the TSP, and because it's Roth, you don't have to pay the taxes on the way out because you paid them up front. This is a huge advantage where you can get double tax incentive while deployed on every dollar you contribute to your TSP, which is why if you have the funds to contribute even over your normal limit with the deployment, I would absolutely recommend that you do so. Number 5 is some tax credits. Now, to clarify for anyone who doesn't know, tax credits and deductions are different. So let's say you get a $1,000 tax credit. That is the equivalent of $1,000 in your pocket. But if you get a $1,000 tax deduction, that is going to vary on your tax bracket. So if your tax bracket was, let's say, 30%, then that $1,000 deduction would only be a net $300, 30%, saved on taxes. So that's the difference between credit and deductions. A couple of things here. So you get a child tax credit. This is up to $2,000 per child as a credit to you every year. Now, there's a difference in tax credits between refundable and non-refundable, basically meaning, let's just use the current example. So for a tax credit, it is $2,000 per child, but only $1,600 of it is refundable. The last $400 is non-refundable. So what that means is if you owe $3,000 in taxes, you would get the full $2,000 tax credit because it's less than what you owed. But let's say you only owed $1,000 in taxes this year and you had a child tax credit. You don't get the full $2,000 because only $1,600 is refundable. And refundable means you get paid it even if you don't owe taxes. So a non-refundable tax credit is money that only goes to zero. Like, so if you owe money, it would go to zero on what you owe. But a refundable tax credit will pay you even below zero. So you can actually get it as a refund. So hope that makes sense. For the education credit, it's up to $2,500 a year, but only $1,000 of that is refundable, meaning can be paid out to your pocket. And then there's also an earned income tax credit, EITC. And I'm not going to get into all the specifics on that, but the cool thing is, even if you're in a combat zone tax exempt, you can opt to use some of that income, even though not taxable, towards your earned income tax credit, and you can get up to around like $7,000, $7,500 in that EITC payment back into your pocket. That is fully refundable. Number 6 is real estate tax benefits. Now, you're going to be able to benefit from all the standard real estate investing tax benefits, depreciation and interest payments and all of that stuff. Because that's so different than normal tax benefits for investors in the real estate space, I'm going to kind of just say same, but there is one called the Section 121 exclusion. This applies to your primary residence. And normally what this is if I sold this house today, as long as I had lived in this house for 24 total months out of the last 5 years, I would be eligible for the Section 121 exclusion. However, as a service member, so if you bought the house while actively serving and you sell the house within 3 years of leaving service, you actually get a 10-year extension. Meaning, if you lived in the house for 24 months cumulative total, it doesn't all have to be at once, but total, out of the last 15 years, you get the Section 121 exclusion. Now, the Section 121 says that if you're single, it's $250,000, and if you're married, it's $500,000, and it is a capital gains tax exemption. Meaning, if you sold your house, you made $200,000 in capital gains, and you were single, you could write off all of that as a Section 121 exclusion, and you wouldn't have to pay capital gains tax on it. For reference, depending on your tax bracket, that's usually between 15 and 20% tax rate. So my buddy had like $500,000 profit, like capital gains, on the sale of a home. And he wouldn't have met the 2 out of 5 year requirement because he had moved out prior to that 5-year mark. But he was active duty. He did meet 2 out of the last 15 years. And he's married, so he got the full $500,000. That comes out to like a 6-figure benefit. Like, that's like he got to keep close to, if not over, an extra 6 figures that he would have paid in capital gains tax and didn't have to, simply because of this extension. So this is huge benefit for anybody selling a house while serving or within 3 years of leaving service that they bought while serving and lived in for 2 of the last 15 years as their house. Fast cars, but no cash? Not in our circle. You see, the War Room gives you the tools to dominate your finances. So if you want in, scan the code, click the link in the description. Number 7 is state of residence, meaning if you get stationed somewhere, you can get an ID, get voting rights. It's a Form 2058, and that form says, hey, I plan to live here full time after the military. So like, let's say you got stationed in Texas, you could do all the stuff to become a state resident, and then you could get all the Texas state benefits. And so sometimes people do this for like Alaska and they have some benefits there, or so some states don't have state property tax or state income tax. And if you're in like a high income tax state and you can move your residency to a non-state income tax state, that saves you money every year. This is something cool that you can do in the military depending on where you get stationed, as long as you get all the proper documentation. And comment down below if you want me to do a deep dive on the residence change. That might be an interesting video. Number 8, you get automatic filing extensions and penalty, fee interest relief. So basically, there's a grace period for you filing your taxes if they're late, especially if you're deployed, and there might be some benefits as far as not paying interest or penalties. So just overall, a little bit of savings there on your taxes and the headache of getting them done in time. Number 9 is for reserve and guard specifically. If you have to travel over 100 miles for drill, you can deduct your travel, your lodging, and maybe your mileage, right? All of that ties into you executing your orders, and all of that can be tax deductible, again, over 100 miles from your home of record. Now, for a couple of veteran-specific tax advantages. First is obviously your disability pay compensation is tax exempt. That's huge, right? Because not only does that help you when qualifying for a mortgage, because it counts as more than you receive because they have to factor in pre-tax valuation, but it also is just tax exempt money from the government. Who doesn't love that? Number 2 is VA education benefits, right? So all of your, GI Bill, all your education benefits and stuff are also tax exempt. So both of those could be pretty substantial income streams that you're not having to pay on. And then the third here is all the state level. Now, again, this goes back to that changing your residence, but being a resident of that state, you're going to need to do your own homework. But a lot of states have property tax exemptions, maybe state income tax exemptions for vets, no tax on military retirement, exemptions for survivor benefits. And then this isn't even taxes, but like DMV and registration fee benefits. Often a lot of states have that for vets as well. And so depending on where you live, like property tax alone can be a pretty large chunk of money that you get to save. Like this house, I think my property tax on this is I think it was like $4,800 last year. And Missouri it's in talks for them to allow property tax exemptions. So that would save me $4,800 this year if they get that passed, which is pretty dope, right? Texas has very expensive property taxes, and they're waived for disabled veterans, right? 100% P&T. I don't know. I'm not speaking to all the specifics for the state, but do your own homework. Those can be very powerful decision points for where you want to relocate and set up your residence. This is a whole lot of ways to say, because you serve or did serve, you might be able to save a ton of money with the IRS or the state tax. That's huge, right? Because every dollar you can save is another dollar you can reinvest. If it was earmarked for the IRS, you weren't going to have it anyway. Now you can. And if you reinvest that intelligently, you can set yourself up for success in the future financially, which is awesome, right? So hope this helped. Make sure you're subscribed. We help service members and vets optimize their financial situation for the future. I love you guys and hope you have a great day.